All right.
Hello, listeners. My name is Charles Scott. Here we are again this fine day. The name of this program is called Can We Talk? I'm here with Charles Scott
Hello,
Jr.
How you guys doing? Hello, viewers. Also, remember, we're on TikTok. We're on Facebook. I put the Twitter up now. We're up on Twitter also. We'll look at any old episodes. Also, email me if you want any questions answered. Also, we have the phone number down there. Although we're not a call-in show, we do get a lot of calls after the show. People asking questions about what we talked about today. And various topics, not just real estate.
One of the things we're going to talk about today is some of the programs that are still out there to help you buy a house. Also, we want to talk about, in the event that you're looking to sell a house, to give you an idea of what's been going on since we were last year talking, as far as what's happening within the real estate market throughout the nation. And as they always say, all real estate is local. So anything that's happening really on a national basis, you got to look at it and say, how does it apply to you? Like a lot of times, if you're looking to sell a property or your house, people always say, well, you know, my cousin called me from North Carolina, called me from here, and this is what he said he sold his house for. Well, that has very little to do with you because everything is local. That's why you need a professional real estate agent to go out and look at the value in your property. Things can change even from one side of the city to the other or one street to the other.
Well, it can change by zip code. And the thing is, I see a lot of clients who come down different parts of the state, and they have agents that don't know the area. For example, here in Fairfield area, if you're looking for a house, I would be careful about flood insurance, flooding, because there's a lot of water underground, especially in Stratford. You wouldn't think there'll be any water underneath this house, and all of a sudden you look at the flood map, it's all purple, which means it needs flood insurance, which means you could get to the closing table and find out you can't afford the house.
Well, one of the things when you're talking about flood insurance there, what's happening is that with all of the cutbacks in the government, it really affects Fairfield County going in from New York all the way up to Boston, because one of the things that was funded previously was residency projects in which the federal government was going to pay to sort of prevent the flooding on the shores. So this would help builders when they're looking to build, when they put their application into a bank, because the bank is going to want to know, well, hey, if we spend all this money building all these houses, what's going to happen when the flood occurs? So the federal government had allocated money to raise the elevation of and put more sand, more dirt in, and so this will help when you go to build a house. Right now, that funding has been put on hold, so that's going to limit the amount of building that's going to occur along the shoreline. That also affects the cost of your insurance.
Yes.
In other words, sometimes, or not sometimes, but insurance companies will ask for what they call an elevation study. If you got to get insurance on that house, they want to know how high above the sea level it's going to be built. So if you're building a house, like you say, you're building a house on sinking sand, they're not going to let you build a $300,000-$500,000 house and have the water come in and sweep it out to the ocean.
Exactly.
So all of this will affect the cost of the house, the resale value, and everything is changing based upon the different types of layouts. The other big thing that's occurred since we last spoke, there's also, you probably have heard of cuts to FEMA.
Yep.
And so maybe you talk a little bit about that. I know that they want to cut money going to FEMA, the Emergency Rescue Act, and so that's going to affect everything.
Yeah, that's what you just talked about. That's what the money was from. It was from FEMA for Stratford specifically, about raising the sand and everything like that. But also we want to talk about other things going around as far as buying a home. As you know, the Time to Own program, we mention that from time to time. We get a lot of questions about it, but I would say it's still healthy for the summer. I would say if this is the last summer we have, this is a great time to buy a house because it's a forgivable loan. I'm actually working for a few clients right now that have reserved their funds. People don't realize once you find a house, you get under contract, we reserve the funds. So at that point, we can stop looking at the ticker go down. We can say, okay, we have our money allocated, and we're just waiting for us to have the appraisal and the inspection. Very good program. I would say we've helped about over 15 people get in the houses with the Time to Own program.
One of the things, a hot subject that's going on right now is probate. Probate is a very hot subject, and I guess that's because of the graying of America. Many people
say something what probate is too.
You know,
also,
well, probate, that's basically if you have a property and you want to transfer it to another relative, or let's say the person that lives there may have senility, or maybe a disabled person, or if they don't have any relatives, or if someone passes away and they have property in their name. Now, what happens to that property? Who's the person that's going to be in charge in case you have a property and let's say, for example, even if there is relatives, there may be 4 or 5 sisters and brothers, and now all of a sudden your mother is sick and she has property in her name, and you want to sell the property. Well, you can't just all get together and everybody sign off on the property. Usually what'll happen is one person is in charge. You might want to get together and all the family members get together and designate that one person that's going to be in charge. And that person could be the administrator or administratrix. That person is the one that's going to be answering the questions, doing the paperwork, because there's still bills that got to be paid.
Oh, yes,
there's a light bill, there's a gas bill, there may be a mortgage, there may be cutting the grass. Well, one person is going to be in charge of that. And so now that one person is going to pay the bills, and that person has to take an accounting of what they spent the money on.
Exactly. Now, I also want to say, some people may say, well, can I avoid probate and just quit claiming the house to a relative? I believe if they do that, there's still a look back period. Isn't that right?
Yes,
I had 2 years.
I had a lady call me today on that very subject on my way to work. She was looking for options. So you do have a look back period, which means that if you take the property out of your name and put it in somebody else's name, usually that's done to if a person doesn't want liens on the property. Like let's say the person's sick and they're going to be going into a convalescent home.
Yep.
Or if the family doesn't have money to take care of the person. You know, it's very expensive. People don't understand.
Yes.
Assisted living or being in a nursing home, that could be over $150,000 a year or more.
Let's break it down and make them really serious. What that deal we did last year, they were paying $625 a day. Per day for just, the 24-hour, I would say, surveillance, the feeding the meals, assisting the person. So it's very expensive.
And that wasn't even a Taj Mahal.
Yeah, that was a regular nursing
regular
home.
Basic nursing home.
Imagine the very fancy ones.
And that was $600 and some per day, because I looked at it and I said, wow, I said, this bill for the nursing home for that month was $18,000 and some dollars. And I said, is that for the year? And the attorney said, no, that's for the month. I said, wow. So if 10 months go by, that's $180,000 that person owes the nursing home if they have property. So that means if they have a house, and let's say the house is worth $200,000, and you now owe the nursing home $180,000. So what happens is that the nursing home requires that you put the house up for sale. You can't have 2 residences, or unless someone's living there. There are some exceptions.
Yeah.
But even if there was no exception, you turn around, by the time you sell the house, there's no money going to anybody. It all goes to the nursing home.
Well, at that point, all the equity's been absorbed by the nursing home.
So you got to be, and if you do it just before you feel like something's going to happen and transfer the property to another family member, there's that look back, like you said. They can go back and say, hey, no.
Look back and say,
can't do that.
You're saying to this person to avoid this. I would say, if anything, if you can foresee in the future, do it within 3 to 4 years before you feel like someone's going to be going to a nursing home.
Yeah, you got to do it when you're healthy.
Yeah, when you're healthy.
When you're healthy. And, like one of the things I told one of the people recently, I says, well, if you transfer the house out of your name, number one, you got to make sure you do it with someone you trust.
Oh, yeah.
Because if you put the house in that person's name, now they own the house. They can sell the house. And you don't want that to happen. Or if you put a house like in somebody else's name, I'm not an attorney, to make a disclaimer there. You need legal advice on all of this, and I would suggest that you get a probate attorney who knows the law. but some cases I've seen where people give the person a life remaindership where they can stay in the house for the rest of their life.
Oh, yeah.
So therefore, you're covered. You don't give the house to your kids or your nephew, and they turn around and sell the house and put you out of the house. So it depends on how the attorney would write it up. Each case is totally different. So suggest you get an attorney and look into that. Where we come into the picture is that we deal a lot with the probate cases where we sell the property. And therefore, if you got equity in the property, it depends. If there's savings that you have, you may have to spend down. You may have to spend all the money you have in your savings account or save before they actually go after the house.
Exactly.
So the main thing is that these are things that you let professionals, work on. We work with an attorney ourselves, the bank. So therefore, you got to you can't just put your head in the sand and ignore these things. We're all getting older. We all have situations. If you have property or you know of your aunt, your uncle, someone's got property, now is the time to start planning. You don't wait until it's too late.
Now, another thing you can use to hedge this is people don't realize, when you get the house while you're young and healthy, you get what they call mortgage protection, something where if, God forbid, someone does pass away, at least you can pay off the mortgage. And at that point, you have the house free and clear. You can actually put it where you have to arrange it. That's another way you can hedge when this is coming.
That's an excellent point. Because look at it this way. Let's say you owe $150,000 on the house, or your aunt or whoever it may be. It's $150,000, $200,000 owed on the house. Well, if the house is paid for, then there's nothing for them in a situation for the mortgage company to come after. So you get life insurance. It's called mortgage protection, life insurance, and that's something you can call us for also.
Yeah, call the number right below.
The number right there.
And like I said, I've had people call me over the phone, and I've come to their house, we come to my office, and it costs nothing to run some quotes and see what you qualify for. And maybe more affordable than you think. Some people say, "Wow, that's it." Yeah, that's it. That odd amount of dollars, you might spend more than that going out to dinner for your family. Say, hey, if that gives you good protection with your mortgage, why not?
The other thing is, there's an urgency to all of this. You say, well, Mr. Scott, why is it urgent that I do this? Because time is not promised to anyone. And even if the time is promised to you and you live out a long life, you can also be sick or have a medical issue, and the insurance company might be considered uninsurable. You won't be able to get the insurance.
Oh, yeah.
So therefore, I always tell everybody where it comes to life insurance, it's something that you got to buy when you don't need it for the times when you do need it. You can't wait till you need it and then say, oh, I need to get that life insurance. Because the insurance companies, they're going to check everything out. And you might fill out the application and they do what they call a prescription check. They check to see what kind of prescriptions you take. And you may say, oh, I'm healthy as can be. And they say, well, how come you taking high blood pressure medication?
Exactly.
Oh, I got a little high blood pressure. Oh, well, how come you're taking this medication? Oh, the doctor told me this. So you don't have to tell the insurance company. They don't even ask you sometimes those questions, because when they look and see what prescriptions you're taking, there it is. So you gotta, I'm not saying that you can't get insurance if you're not healthy, but the cost is more, or you may not be able to get it. So get it now while you're healthy.
I was going to say, I actually had some customers from last year, younger, under 40 years old. They got some great rates, and they're going to hold those into their 60s, because at that point, that same rate will stick with them. Won't go up, won't go down. Versus I have some other customers who were in their 60s, and unfortunately they got denied due to past health issues. So think about it, getting it while you're young, you're healthy. And remember, it's going to be the same rate for the entire term of that insurance.
And I believe that policy was for $1 million.
Oh, yeah.
$1 million. That means that in case that person passed away, there's $1 million going to the beneficiary. It could be split up between a whole lot of beneficiaries. You can designate how you want it paid out. And like you said, the rate stays stable. If that person gets sick, you ain't got to worry about it. Can't take it away from them as long as they make the payments.
And one more thing I always want to sorry, I love talking about insurance. You guys can call me all day. We'll talk all day. But I was gonna say, remember when you get a benefit, you put your children or your spouse, that money comes to you once you present the death certificate. It's tax free. That is non-taxable money. That money goes. When it's $1 million, it's $1 million. The people in this world, they hear money, they think about, okay, after taxes, how much am I getting? No, you're getting that check from the insurance company for the amount, what they call the face amount of the policy.
So no taxes on life insurance.
Mm-hmm.
Well, they say everything is certain, death and taxes, but if you die and you got the life insurance, you're cheating the tax man.
How about that?
Because he doesn't get any of that money.
Mm-hmm. And then also, there's a new thing going around. I have people call me a lot about this. It's called prepaid funeral, where you prepaid a funeral home. I mean, it's an option, but why not just have your own life insurance policy? It gives you more control. I mean, I'm not saying that it's not a bad alternative, but with the life insurance, at least it sticks with you wherever you go versus you have to commit to one thing.
So as you can see, we are a full-service real estate agency.
Mm-hmm.
If you're looking to buy, if you're looking to sell, if you want to know just what the value of your property is. But years and years ago, I figured, well, why not, if I'm going to be creating wealth for people, if I'm going to be selling a house to someone, the greatest cause of people losing their house is a premature death or illness.
Mm-hmm.
So I said, I got to figure out a way for these people to keep this property. And that's where, I've been in the life insurance business or the mortgage insurance business. Actually, the same time I've been in the real estate business. And my son,
if not longer.
If not, longer, because actually that's how I started out.
Mm-hmm.
And then I went into the real estate business. But I've always been involved and kept my license. And, you, Charles, you have your life insurance and your mortgage protection license also. Mm-hmm. So we can not only sell a house or help you buy a house, but we can also, for people out there, we can help you protect that house so that in case something happens to you, it stays in the family. And it doesn't have to be a house that we helped you buy or we helped you.
Oh, yeah.
It can be any agent could have helped you buy that house,
Mm-hmm.
but we can come into the picture and see that you are able to keep that house if something happens. It amazes me how many people out there have the GoFundMe pages.
Oh, yeah.
In case something happens to a deceased. Well,
Mm-hmm.
it's very difficult to do a GoFundMe page to pay off your mortgage.
Oh, yeah. I mean, people do the GoFundMes. Honestly, few GoFundMes go over $20,000. Usually that's the limit they're asking for the funeral, basically. But remember, after the funeral, that person still has bills coming in. They still have mortgage notes. They may have credit card debt that was unpaid and car notes, So you may realize I need a lot more than $20,000. And you may realize, hey, I could have got an insurance policy for this amount for $100,000, $150,000, and that'll be enough to take care of some of these debts in case something, unpredictable happen.
Well, one of the things that I get is like a lot of times people, if I talk to someone about getting the mortgage protection to protect the mortgage or the life insurance, they'll say, well, I already have that. I got that at work.
Oh, yeah.
Or
I love that question.
And I said, well, did you have that before you bought the house? And they say, oh, yeah, I've had that for a long time. I said, well, what was that for? Oh, in case I pass away or something. Then I said, well, then that has nothing to do with your house. Mm-hmm. In other words, that money you got and that money you bought that insurance for was for a specific reason. Now that you have an additional debt of $200,000-$300,000, what it is, you need another policy to cover that. If you had a renter's policy and you were renting an apartment and you bought a house, you can't go to the bank and say, oh, I already have a renter's policy. And they're going to say, well, that has nothing to do with the house. You got to get insurance to cover this house. That was for the renter when you were renting.
So I love that rebuttal. People tell me, well, I have that at my job. Well, I say, okay. And then sometimes they'll show me the policy. I'll look at it. It's never for more than $25,000, maybe $40,000. And I said, well, how much is your mortgage? And they say, well, mortgage is $250. So look at what my rate can quote you. They'll say, oh, wow, that is pretty much affordable. And you got to realize, well, if your job fires you tomorrow?
I was going to say
what
that.
if you lose your job?
That's what I was going to say.
But that way, now you're uninsured by them. And think about it. Let's say you, God forbid, get fired in your 40s when you could have bought this insurance in your 30s, and it would have been a lot lower. I always tell people who tell me, I'll think about it. And I say, okay, see this number right here? Next time I come, it's going to go higher because obviously you're older. Whether you're a week older, a month older, or a year older, that number has to go up unless you lock it in today. And then at that point, it doesn't go up, it doesn't go down, and the coverage stays level.
Well, here's another way to look at it too.
What's that?
You have insurance at work. You're at work, everything's going along fine and everything. And now all of a sudden, as you get older, you get a little high blood pressure, maybe a little diabetes, a little this, a little that, a little this, a little that. Now you say, well, I want to buy the insurance. Well, just because now you waited to get it, the insurance company say, oh, wait a minute. We talked to you back when you were really healthy. Now, you maybe, and you know, it has to do with everything. Well, you gained a few pounds there. Well, so therefore, you could still get it, but like anything else, it's going to cost you more. So, you know, now is the time if I'm talking to people out there, or maybe if you know family members, you know, have them give us a call, because like I said, it doesn't have to be a house that they bought from us or that we sold them. It could be any property out there that someone owns, and if you really want to protect, you know, that person, well, look at it this way. I've had situations where people took out the policy and paid for it with their money, because if something happens to them, to the loved ones, they're the ones going to be inheriting the house. I've had children that would take an insurance policy out on their parents, because if something happened to the parent, that way the parents' wishes are that the house stay in the family. So therefore, and if you're going to be the beneficiary of the person's house, it behooves you to pay the premiums for your family members, so that if something happens, at least the house is paid for and stays within the family.
Stays within the family. That's the important part. And remember, it stays level. So, for example, if I sell you a policy for $200,000, and let's say 15 years from now, God forbid, you have to do a death claim, it's still $200,000. While your mortgage has been going down little by little, you've been paying the principal and the interest. So even if your mortgage, well, what I'm saying is basically there may be money left over. You can pay off the mortgage and still have money left over to do what you have to do for bills, any debts, college funds, whatever you need to do.
You know, I sort of segued into this because I think it's very important that people out there realize that if you have a house or you have property, you not only have to put insurance on that piece of wood in case it catches on fire or someone gets sued, but you have to put insurance on yourself to make sure that you keep it, or if you want your family to even be able to inherit that house. You know, the other thing that, you know, you have to be concerned about is you got to be healthy when that particular property, when you take out that insurance. You don't have to be very healthy, but it's something that you have to do right now while you can, because anything can possibly happen. You know, a lot of times people will say, well, if something happens, I'm going to leave the house to my sister or to my children. Well, I always say this. You can't leave something to somebody that you don't own. You have a mortgage. You have bills to pay. If you buy a brand new car and all of a sudden it costs you $40,000 and you still got $25,000 left on the car, unless you took out that life insurance to pay it off, if you pass away, they can't come and say, I'm leaving the car to my brother. The car is not yours until it's paid for. So you can't leave something to somebody unless it's paid for. And that person just can't come and finish paying for it because it's not in their name.
And at that point, they're going to be forced to sell the house because they need that money to pay back the bank. They can't just, you know, you can't really just leave it to them unless you have something in place in order to help pay off that debt.
And even then, we're all assuming that you're going to get more for the house than what you owe on the mortgage.
Oh, yeah.
Because what happens if, you know...
God forbid you pass away in a buyer's market where people forget 2009, 8, 10, short sales. What's that? You haven't heard that in years. Short sale. That's when the house is selling for less than what you owe for it. So at that point, you may sold money to the bank.
The other thing is, see, we're telling you all these things that we've experienced.
Yes.
And here's another good one. Listen carefully. A lot of people don't want other people to know their business.
Oh, yes.
So therefore, mommy and daddy bought the house. And the house at that time cost let's say $125,000. They've been paying the mortgage for 15 years. So you're assuming that if something happens to them, well, there's not going to be that much left on the mortgage, and you'll end up getting a house. But what they didn't tell you, because they don't want you to know, they refinanced the house. So now it started off at $125,000, but they needed some money to help them with their retirement, and they went out and they put another mortgage on there. So now $250,000 or $300,000 is owed on the house. So you're assuming, well, they don't owe that much on the house, but then heaven forbid they pass away, and now you find out that there's a $300,000 mortgage on the house because they refinanced the house and got extra money put onto the mortgage. So now there's a good situation where if you refinance your house, if you put additional debt onto that house, you get additional life insurance or mortgage insurance to cover the additional debt. If something happens, now the house is paid for. And like I said, in many cases, it's best that the children or the family members even pitch in to help pay for the insurance, because it's going to be their house or their asset in the end anyway. So I'm just letting you know that there's things that we can do, because a lot of people don't understand that there's options. These are some options. And maybe you don't want to get get all the insurance, but get something. Maybe just enough to have enough money coming in that you could have a chance to think about what it is that you want to do.
I also want to say that also the same vein as the refinancing, sometimes people pass away, don't tell their children they get a reverse mortgage. And
that's another one. We could do a whole session on that.
They're going to really be in a pickle where you have to either get that note paid off or they're going to get the asset and sell it themselves.
Yeah, so anybody out there with a reverse mortgage, we're going to have a special session on, on life insurance and reverse mortgages and what you can do.
Yes.
And you should be able to tune in, or see the number down there. If you have everybody's different. Call us. Call us at that number there. We can give you some personal advice as some of the options that you have that we can incorporate that will make your life a little bit easier.
Exactly.
So basically, we
It's
covered
turned into a life insurance episode. I like it though.
We turned
I
into
talk about insurance all day.
My son here, he's licensed. I am licensed in life insurance and not only real estate. Because like I said, we not only want you to buy a house, we want you to keep the house or pass it down and have a legacy for your family.
Exactly.
We want to protect you all the way around. So until next week, God bless.
Amen.